I guess the good news here is that neither side, neither Republicans or Democrats, think that the current status quo is at all good. I think they both want sort of big, comprehensive packages. Nobody thinks that these executive orders in any way really solves any problem for any substantial time. So they both think they want a comprehensive package. So the difference is, at this point, maybe $1 trillion or so. A big chunk of that $1 trillion is really that aid to state and local governments. I could easily see with Republicans saying, look, what you really need between now and the end of the year is a lot less than that. States and local governments maybe need half that amount of money between now and the end of the year. That's $500 billion. You tack it on to the trillion, so you get $1.5 trillion. The number begins with a 1. Republicans will like that. You get a lot more aid to the state and local governments. Democrats like that. Everything else will push to 2021. Let the second Trump term or President Biden worry about that. That's how I think it should go. I think that's how it will go. Whether it goes like that in 7 days or 3 weeks, that I'm not so sure about.
So let's talk about the strategy and posturing by both sides. This is an election year. This is a time when President Trump, Democrats in Congress, many of them are coming up for re-election. It was a market conclusion, a consensus that in election years, things go well because everyone does whatever they can to help the American public vote for them. How do you kind of square that particular conflict between the administration and Congress when middle America is hanging in the balance right now?
That is sort of the number one question I get is, why is anybody focusing on whether it's 1.5, whether it's $600 a week or $400 a week? Just do kind of a more of everything package, push money out the door. We saw very high unemployment, and let's worry about everything else next year. I think the reason is, particularly on the Republican side, that they actually think that some of these ideas are bad for the economy. They really think that if you put another $600 bonus payment for the rest of the year, that will actually hurt job growth. And they are sort of ideologically very skeptical whether all this spending, a $2 or $3 trillion bill, will actually do anything for the economy. So that means, so there's an actual belief. It's good. It's easy to be skeptical, but I think there's an actual core of Republicans who wonder whether this is actually good, a good economic policy for the American people. And that's why I think it's been so difficult to come to a deal.
Are any of these elected officials in Congress, the administration or otherwise, are they at risk of losing their seat if they are seen as too opposed to any kind of a virus relief package?
Listen, I think they understand that the better the economy is on election day, the better it will be for them. You don't want to be, you don't want to be the guy who's Dr. No. And I think they can say, listen, we've already spent several $1 trillion in aid. Remember, we were fighting over the Obama stimulus package. That was like $800 billion. Now we're doing like $1 trillion. It seems like every few months. You can't really say that we've been pro austerity here. We've spent a lot. And we want to spend a lot more. We just maybe don't want to spend as much as the other side does.
What exactly does this then mean for investors? The reason why I bring it up is because it seems like much of the tailwind has been, the Fed and its actions for liquidity, and this idea that we're going to get trillions more in stimulus down the line because of the virus. Investors have been riding that wave higher. At what point should they worry?
Right. So every Wall Street forecast that's at all bullish about the economy in Q4 and into next year is assuming they'll get 1 to 1.5 trillion. I think that is what is baked in. If you start getting a number less than that, that's when I think markets might react, and therefore markets become an action forcing mechanism. I mean, at the end of the day, that's really the bottom line. Well, as we saw back in 2008, will markets become the action forcing mechanism that makes Congress act in a way that pleases it? I think that's what will eventually happen. I think that's what ultimately will put a floor under the market. It itself will put that floor underneath.
What's your own personal feeling and projection about what this economy looks like a year from now?
Listen, I'm concerned. I'm concerned that we're going to have generally a lot more risk aversion by people wanting to make decisions. I mean, this is a huge, psychological impact, I think, on consumers, on business. There's going to be a lot of debt out there, government debt, private debt. I think at some point we really need to look at what kind of economy we want. what we want to do for taxes and regulations to make sure this is a high productivity economy going forward. Even before the crisis, this was a low productivity economy. If we want a lot of fast growth afterwards, that's what we need to focus on.